Thank you. Now, yeah. Hello, students. As I told you, we'll have a short video for this case. I think in all the sections we have been through with the balance sheet on 30th April. So just to capture that balance sheet on the face of this document, uh, I think we can have the asset side will be repetition of these numbers. If you recall, office furniture will be 96,000. Office equipment will be 1,80,000, and office stationery will be 11,000 because 3,000 rupees of yes stationery you have not taken over. And then receivables from project financing will be as such 1 lakh. Cash in hand will be 20,000. But if you recall, we will have one more asset called goodwill on acquisition 1,53,000. So what I'll do, I'll just type here goodwill on acquisition will be 1,53,000. So that is an addition because to buy this company, total consideration of 5 lakh was paid to Smita in the form of share issue, if you recall, right? And that would make the total of the asset side 5,60,000 because the revised asset figure is not 4,10,000 but 4,07,000 because you did not take this 3,000 rupees of stationery. Then coming to the other side of the balance sheet, capital and return profit. These are the figures in the balance sheet of Smita and Co. These individual items do not have any implication for DFS Private Limited's balance sheet. There you will have straight of equity share capital 5 lakhs and expense payable 60,000. So total is 5 lakh 60. Then in the month of April, if you recall, another, I think, two more rounds of share issue happened. So one is issue of 10,000 shares at par. That is 10 lakh rupees further. So your cash in hand will increase by 10 lakh rupees further, and your share capital will increase by 10 lakh rupees. So the revised share capital thereafter will be 15 lakhs, and cash will be 10 lakh 20,000. Then we invited that pre-incorporation expense into the balance sheet. So pre-incorporation expense and pre-incorporation payable. Payable is a liability. So below expense payable, you can put it as another item called pre-incorporation expense payable. That is 60. No, sorry, not 60,000. That is 36,500, isn't it? But then where to park the pre-incorporation expenses, or simply we called it as incorporation expenses of 36,500. Please understand that the corporate balance sheet as on date as I'm speaking doesn't have any room to put this kind of figures in the asset side just for the sake of tallying the balance sheet. Those days of accounting are long time back over. So conceptually, we do not have anything called fictitious asset as on date, as I was trying to explain in the class. So we'll retain it as a negative component under equity, just like in case you have accumulated loss position. No way the accumulated loss of a company, which is a negative figure, you can park it under asset side just to tally both the sides because that's a highly misleading item to somebody who is not grounded in accounting. Because imagine that your accumulated loss is, let us say, for a company like this DFS, just a hypothetical number, say 50 lakh rupees after 5 years' time. And you continue to show that in the asset side means the total of the asset side could be 60 lakhs. So somebody who is not grounded in the subject, like this balance sheet is just not meant for a chartered accountant or MBA finance or anybody who is professionally competent to read financial information. Therefore, they have dispensed with that, I think, long time back. Company law got amended to deny any kind of this kind of item, in the asset side. So we'll park it under equity as a negative figure. That's why your return profit figure can be a negative figure. If at all it is an accumulated loss position, it will be a negative figure. Okay, done. So then I think we'll go to the transactions which are happening in the month of May. Yeah, one more thing. I think on in April, 9,000 equity shares you are again issuing, and that too with some premium this time, 20 rupees, isn't it? So total cash company will receive out of this third round of equity issue will be 10 lakh 80,000, and 1 lakh 80,000 is securities premium, and 9 lakhs is increase in equity share capital, and then cash will increase by 10 lakh 80,000. I think everybody has this balance sheet, the final balance sheet on 30th April. Then since the coverage in four sections is not equal, one of the sections has the maximum coverage. In fact, in the class, I could discuss up to transaction number 7 or 8. So in this presentation, I'm capturing the entire discussion again, so that with this discussion, you would like to prepare the final balance sheet P&L. And then, as I've told you in the class, once you develop that after a few days only, I'll send you the solution file just to check. Okay. And your solution should be based upon this recorded discussion, because if you assume something else, your answer might differ. So stick to this video. The first transaction is very simple. You are paying a refundable security deposit of 3 lakh rupees, and then that would be an asset for you. So the journal entry, I'll just type out the journal entries. Okay. Security deposit, you'll have to debit because it's an asset that is increasing. And Luca Pacioli told that whenever an asset increases, the word debit has to be used. So the amount would be 3 lakh. And then I'll have to credit cash because I have paid cash. Okay. You can notice that I'm even avoiding account kind of expression multiple times. And because as usual, to repeat, you will not be accountant. You will not prepare vouchers to record a transaction. You will not record it. Forget about doing these things. You will not even be involved, I guess, in balance sheet preparation of a company. So we're learning all these things to just understand implications of financial items in a better way. So that's it. I'll just put it in red font so that it catches your imagination. That's it. That's the journal entry for the first transaction you have. So I believe once I have the journal entry for you, you can pretty well prepare the ledger accounts, then go through the entire process and then prepare the balance sheet and P&L. Okay, done. It printed office stationery worth 30,000 wearing company's logo, address, and name. It paid half of this bill and stretched the balance payment by 3 months to enjoy cash holding. So I'll just uh, put it like this. Here I'll have the journal entry for this transaction. So office stationery debit, it is an asset because we have not consumed as on date. We're just bringing in stationery stock. That is debit is 30,000 rupees. And then as usual, we'll pay cash 15,000, half, yeah, half, okay. So cash will be credited because cash will decrease. It is an asset. So if an asset is decreasing, look up as I told, use the word credit. The balance is payable, and we need to give a very convenient name, which is sort of self-explanatory. So we'll call it as, payable for office stationery. I'm just using short form so that I will not struggle with the space. It should be credited because liability is increasing. Then it has to be credited, right? Yes, students. Okay, yesterday I met one of your seniors and he narrated a beautiful experience related to these journal entries even. he is finally placed and he has got a PPO. That's a fantastic thing to happen in the life of a management student. Okay. So pre-placement offer. Now question is, he said, Professor, I got the summer internship and let me tell you, thanks to, he's an engineer. Okay. He's an engineer or a science graduate. That point I just don't remember. He said that, Professor, they asked me one journal entry, and I had a sort of tussle on that because he wanted to bias me. Then he said, "Are you sure this is the entry?" Then I said, "Yes." He said, "No, no, it can't be this way." Then he insisted that this is the journal entry for this transaction. Then he was asked to go out of the interview room because he just insisted vehemently, "No, I'm not wrong." Means what? You're proving you are very right. So he was asked to go out of the room. And after all other students' interview got completed, he was called back again. Then, surprisingly, the corporate person asked him, "You have still some time with you. Would you like to change your journal entry?" He said, "No way." Then he was very happy. Then, uh, then I think, yeah, rest of the things I should not put in public domain. And then he was taken. And that was a beautiful story. So the student came and met me and said that, everything we are learning, we do not know what point a question can come to us. So I would request, be very clear even in journal entries as far as understanding is concerned. Okay. Beyond that, I don't think should be bothered. Now the next part of the transaction. Stock of stationery at month end was 28,000. This is an indirect way to help us to compute the stationery consumption figure. So let us count our stationery first of all. I think you took over stationery of 11,000 from Smita and Co. Then now you printed 30,000, right? 30,000. Then at the month end, you are left with 28,000. So if you deduct it, then I guess you'll get a figure that is equal to, I believe, 30 plus 1141 minus 28, 13,000 rupees of stationery you have consumed. Okay, consumed. Stationery consumed figure is an expense. It's gone. The benefit is gone. So expense has now gone up. And the word debit has to be used. Assets and expenses are in the same side of the equation. So what we'll call, we'll straight away call it as stationery consumed, isn't it? If by mistake I'm looking at the keyboard, if there are typos, please bear with that. Okay, stationery consumed debit, and that is 13,000. And obviously, with consumption of stationery, your stationery stock will come down. So it's an asset. So if the asset is decreasing, then Pashwali told us to use the word credit, isn't it? So simple. See, so I can call it as simply stationery or office stationery since we have previously called it. So we'll be consistent. Office stationery credit, credit 13,000. Okay. So that's the journal entry to record consumption of office stationery. Stationery consumed figure will hit the P&L as an expense, and office stationery balance of 28,000 will go to balance sheet as an asset, of course, under current assets, isn't it? Then you purchase an IT system worth 2 lakh rupees, out of which 75% was paid, means you have paid 1,50,000, and the balance was to be paid after 3 months, means it's a current liability. It's just not important to prepare the balance sheet because we have to classify liabilities and assets into current and non-current. Therefore, it's always important to figure out where exactly you have to place the item. So let us record this part of the transaction. So IT systems will just call it as IT system. Okay. IT system debit. This is an asset. Debit would be, of course, 2 lakh rupees. Asset is increasing, so we are using the word debit. And then your cash is decreasing. Cash is an asset. Therefore, cash you have to credit, isn't it? Cash is decreasing means cash will be credited. That is 1,50,000 rupees. Then the balance is payable. So as usual, we'll style the name of the account in such a manner that it will be evident what it is all about. So payable for IT system, okay, system, and that will be credited. Okay, of course, it has to be aligned properly. Debit credit words should come below one by one. Then this figure will be 50,000. Okay, done. So this part of the transaction we have recorded, and then we'll move to the operating software transaction. So operating software worth 30,000 was purchased by paying cash and install. Please understand that when we go to details of CAP, then we'll understand that without this operating software, the hardware has no meaning. The hardware cannot operate. So in an automated factory, maybe some robots are working. For example, in Toyota's plant, let us say the paint booth of Toyota's plant, human beings don't spray the color on the car body. It's all done by robots fitted with spray guns to paint the car body. So those, you call it as robotics, right? So obviously you have some software the robots are using. That part is an integral part of the hardware. So if operating software is part of IT system, will not create an intangible asset called operating software. Please understand that accounting teaches operating software as a part of tangible asset, that is hardware. But application software will be intangibles, okay, placed under intangibles. So we'll go ahead with this recording. So we're not going to open operating software as a different asset. We'll debit the same old IT system account, IT system debit 30,000 because the asset value is going up, increasing. So we are using, then we have paid cash means cash will come down, decrease. So if the asset decreases, this credit 30,000. I have no idea how many of you become kids have already subscribed to this modern approach of passing journal entries, but I think I leave it to you now because you are mature enough to understand which method is easy. That should be left to the individuals, isn't it? Done. So this goes to the IT system. Then I think next transaction would be depreciation. The estimated lifespan of the system was uh, estimated to be 3 years with a residual value of 14,000. Okay, so if that is the case, let us calculate the depreciation. Total IT systems value by now is 2,30,000, and the system will be alive for 3 years. Yes, let me pitch in with an additional concept here. Please understand that today's PPE accounting, property, plant and equipment, there is a specific standard for this Indian Accounting Standard 16, okay, for property, plant and equipment. Uh, Dear commerce students, please, uh, as far as this course is concerned, okay, please don't use the word for fixed asset, okay, because we are no more using that kind of language in the balance sheet. But Fixed asset concept is not a wrong concept. Property, plant, and equipment, all the assets which are long-term tangible assets like land, building, furniture, fixture, IT systems, vehicles, cranes, plant and machinery, office equipment, everything will come under PPE. So those assets are called fixed assets, isn't it? Non-com students, please understand that by fixed assets, we are not suggesting in any way that the assets are fixed to the ground. Okay, that will be a ridiculous way to understand it. What they are trying to say by this expression is that these assets, the form will remain fixed, machine will be machine, building will be building. But just go back to few other assets like inventory. Raw material will not remain as raw material. It will be converted to work in progress. Then that in turn will be converted to finished goods. Then tomorrow you sell it, you might have trade receivable. I said you might have means possibly you are selling on credit. And then the customer will pay you back cash, isn't it? So these assets are not fixed in their form. They're ever changing assets, right? Therefore, as opposed to fixed asset concept, and the commerce students call these kind of assets as circulating assets, or say you can call it, there are various names, okay. Some people call it as fluctuating asset, but I will not suggest you to use that. Fluctuating means what? The value would be fluctuating like an investment, right? So these are all circulating assets which are circulating the cycle, okay. And there are some assets which are fixed. So everything in your classroom you see, all those assets are fixed assets, right? but but IFRS language is not fixed asset. It is either intangibles or PP. That kind of language will use. Done. So, and coming to this account, that is the gap on PP. They talk about a thing called component accounting. I'll explain this later. But for the timing, for this example, the implication of component accounting is that if different parts of the asset have different useful life, then you have to calculate depreciation on different parts of the asset separately. So why did I bring in this discussion into this case? See, we have IT systems, the hardware, 2 lakh rupees. Then we purchase operating software worth 30,000. It is quite possible that the operating software license is for 3 years or 5 years. If it is for 3 years, we don't have any problem, because if it is 3 years, the asset is also, I mean, so the hardware is also having 3 years, and we have clubbed these two things together, right? Called IT system. Depreciation calculation would be easy. But in case the life of this operating software, my laptop might be damaged, but if I have the license for the software, a new laptop I purchase, I can key in that security key and then use that software for whatever lifespan it is having. From that point of view, I just thought I should make you aware about component accounting, which means possible on 2 lakh rupees will charge depreciation separately, and 30,000 rupees will charge depreciation separately. Charge here means calculate depreciation separately. But both the figures taken together will be depreciation on IT systems. Okay. I hope you got it, this concept. So in this case, we are assuming everything is for 3 years. Then if that is the case, so the residual value would be cost of the asset is equal to cost is equal to 2 lakh 30,000. Then we'll have less of residual value. Okay, just shift it to the right. Okay, residual value would be 14,000. 14,000. Okay, then the amount that has to be depreciated, you call it as depreciable amount. I think that's all about correctness of English word. Depreciable amount means the amount that will be depreciated over the lifespan. Which lifespan I'm referring to? Useful lifespan, isn't it? Depreciable amount will be then that would be 2 lakh. I believe 16,000 rupees. Sorry, it should be 2,16,000 rupees. And if this is for 3 years, then under SLM, straight line method is equal depreciation over the useful lifespan. Okay. So under SLM depreciation will be equal to per annum, I think it is 72,000. That translates to depreciation per month will be, that is again SLM, right? Will be 6,000. Now let us take note when this asset got ready for use, 16th May, which means we are taking 3,000 rupees as the depreciation, rupees 3,000, okay? Depreciation reduces the asset value. So listen to this discussion with a little attention, because this again might modify our way of understanding depreciation accounting as far as commerce students are concerned. Generally, I think anybody would like to have this kind of entry. Depreciation is an expense. It is the reduction in asset value. So I'll debit it because expense is going up. Depreciation debit 3,000. If it is not a corporate, means there is nothing like Companies Act, there is nothing like Ind AS applicable to you. So your accounting is bit, uh, I think, not weaker platform, but I'll say regulation to that extent does not influence your accounting. I think this will be a political way of putting it, right? So I will reduce the asset value. That is common sense. So I'll credit my IT systems. Okay, that is what accounting teaches us. But what is that point I'm trying to drive home? If you do this, or if you make this journal entry, don't you think the IT system's value is getting reduced in your books of accounts permanently? But corporate accounting is a little bit different, because disclosure of financial information is a significant issue in accounting. Accounting is just not journal entries. Commerce students have to slowly accept the issues involved in accounting as a subject. Okay, I said that accounting is just not a journal entry. It is also about disclosure. How I would disclose information to the market. Corporate accounting demands that the asset figure I should not touch. The asset figure should be kept intact, because I need to disclose to the market things like this. Be with me. Uh, Regulation is demanding that I must disclose IT systems at cost, I'll say. Here, for the timing, commerce students, we are not going to touch on the subject of revaluation, so forget it. If I have revalued some assets, I will have to write it, IT systems at revalued amount. Okay? Let us not confuse the other kids by bringing the issue of revaluation. So IT systems at cost will be 2,30,000. Okay. I may not show this kind of picture on the face of the balance sheet, but then every item might have a detailed disclosure in the notes. So notes on PPE has to show these figures like this. Whatever I'm trying to tell you, just check with a corporate annual report, listed company's annual report. Then I think you will appreciate. Otherwise, you might think Professor is creating some knowledge body out of his personal imagination. Okay, that's not the way. Less I have to put something called accumulated depreciation. Let me just put the way the disclosure ought to be made. Okay, so at cost, Instead of writing IT systems at cost, you may use the word, you know, gross value, gross value 2 lakh 30. Then less accumulated depreciation. Since this is the first time period we are charging depreciation, my accumulated depreciation will be 3,000. Trust me, therefore, if let's say June is over, my accumulated depreciation will be 9,000. Why? Monthly, my depreciation is 6,000. So at June 30th, suppose I'm going to repeat this case, that is to prepare a balance sheet. My accumulated depreciation has to be 9,000. So accumulated means the total depreciation till date. You need to appreciate that, okay, the concept. So you have to understand that accumulated depreciation is like a negative asset value. I think that's the best way or the best mathematical sense we can impute into understanding this concept called accumulated depreciation. So then I'll have something called net value, isn't it? That would be 2 lakh 2,27,000. Okay, done. So if this is how my disclosure of information should happen as per regulation, this journal entry will be a wrong journal entry in the sense it will be inconsistent with this information disclosure. So we need a modification here. Depreciation would be debited 3,000, but will not credit the asset account. We will have to credit. We will have to credit. Okay, that's the language emphatically I'm using to give you the correct perspective of corporate accounting. Okay, accumulated depreciation is credit 3,000 rupees. Okay, so this is the journal entry you expect to pass in corporate accounting. Okay, so engineers can, I think, quickly connect because they are learning it for the first time. So for them, there is no problem. What is the advantage with this kind of journal entry? Depreciation is an expense in both the cases. Whether we credit IT systems or accumulated depreciation will go to the P&L. Therefore, our P&L doesn't have any problem. But don't you think now IT systems account will continue at a value of 2,30,000 because you never touched that asset, isn't it? You'll have another account called accumulated depreciation, which will have a credit balance of 3,000 rupees. So IT systems being an asset, this 2,30,000 is a debit balance. And accumulated depreciation on that asset is a credit balance. That's why I told you just visualize that it's a negative asset. Then the negative asset figure of 3,000, you're just offsetting somewhere in the notes, then disclosing the net value on the face of the balance sheet, 2,27,000. If you have one asset, okay, you may show this entire picture, this whole language on the face of the balance sheet also. Not a crime, isn't it? To avoid clutter of information on the face of the balance sheet, to make it more clean and to the point, more meaningful, more intelligent, you provide notes where every item detailed information is given to you, right? And remember always, notes to accounts are a part of financial statement. It is a part of financial statement, okay? It's nothing else. So then I think for all times to come, you should follow this way of charging depreciation. Which way? This is the right way. This is the right way to charge depreciation in corporates. The journal entry I'm talking about. This is the right way to disclose asset figures. That's it, okay? I hope you got it. Then and the IT system got it. I think we're done with this, okay? So then we'll move to the next transaction. It was also estimated. Now you must be students, you must be noticing that why I have created this small case for you because my intention is just not to repeat the journal entries for you, but possibly many points in the case you would have noticed by now. My intention is to bring in some additional discussion or concepts into the picture, right? Like this, I just mentioned this thing here. Okay. Yeah. Then the old assets taken over from Smita and Co would be written off over next 2 years on SLM basis. Let us go back to the balance sheet. Somehow I'm missing the amounts. Please allow me to go there. Old assets, depreciable assets are office furniture and office equipment. 96,000. 96,000 has to be reduced to zero over 2 years. So per annum it is 48,000. Then per month it works up to 4,000. And we are assuming since they are office furniture and office equipment kind of asset, the company got promoted on 1st of April. But the question is, when did the company take the rented house? Because that would tell us from which date. I think that's a reasonable way to think. Oh, okay. You have taken the property on 1st May. Yeah, that's how the date I have given. Means for the whole month of May, you have to charge depreciation. So go back. 4,000 on office furniture and office equipment is say 90,000 per year, which translates to 7,500, I believe, per month. Yeah, so the total depreciation on these two assets would be 4,000 plus 7,500, 11,500. That is the additional depreciation. One more entry we need for depreciation. So in a way, we are repeating the depreciation accounting. So the same way, I think I'll just create some space here. Oh, no, no, not this one. I'm just sorry. Yeah, this is the thing. Okay. So what I'll do, I'll just repeat the same pattern of journal entry. So I'll just put it depreciation account debit. Debit, I think 11,500. I mentioned 7,500 plus 4,000. And then I will not credit office equipment and office furniture. Once we understand the concept, we'll continue to use that accumulated depreciation. Okay, will be 11,500. Okay, of course, this has to be credited. This is like negative asset I have explained, isn't it? So credit, and then the journal entry is over. And as usual, when I disclose asset value, I'll continue to show it at the cost of acquisition. Then 11,500 has to be shown as a deduction from the asset value. It's just a repetition, nothing additional to learn, isn't it? Then we'll talk about purchase of an office furniture, 3 lakh by paying cash on the last day of the month. If it is last day of the month, let us avoid depreciation calculation for one day. Because if you insist on depreciation calculation, I will say that I received the assets late evening that day, so no depreciation, right? And the useful life of this asset is 5 years and nil residual value. So per annum 60,000 will be the depreciation. That will be relevant for the month of June. It has no implication. Depreciation will not calculate, but just will record the asset purchase transaction. So the journal entry would be office furniture account debit because asset is increasing, so I have to debit it. Then cash is decreasing, another asset is decreasing, I credit cash, so cash will be credited 3 lakh rupees. 3 lakh rupees. Done. So this is the journal entry I have made for capturing this transaction in my journal, the one of the books of accounts. I'm repeating these kind of obvious sentences for the sake of non-com students. Okay. As luck struck, the company got a project financing assignment with an estimated fee income of 30 lakhs. This is a contract you have signed. No transaction has happened, right? It is not that you have immediately got income of 30 lakhs. So it's just information move. The contract with the client yielded an advance of 3 lakh that was supposed to be adjusted against the final payable. Means uh, this is advance from customer. And advance from customer is a liability because this has to be settled by supply of goods or service. So if a liability increases, then the item has to be credited. So I'm getting cash. Cash is an asset that is increasing. So partially told us to use the word debit if asset increases, debit, and the amount is 3 lakhs, 3 lakhs. Then I'll have to credit advance from customer has to be credited. Okay, that is 3 lakhs. Just move it like this. I think it looks so nice now. So cash debit, advance from customer credit. When you put it in the balance sheet, of course, advance from customer has to be under current liability because this will be just adjusted after couple of months. That's total contract duration is 3 months, right? So that's it. That's a liability we have recorded. Then we'll move to the next transaction. It billed fee income of rupees 12 lakh for the month of May and got cash of 7 lakh on 31st May. So you have first time you earn some income, right? So you can call it as fee income. You can call it as consulting fees. You can call it as consulting charges. So it depends on you. How to style an account is absolutely your liberty. Regulator has nothing to say, but you cannot call this sales as salary. I think outrageous ways you can't just move. Okay. So we will call it as, let us say simply fee income. Okay. So total fee income is 12 lakh rupees. That's income. So income is increasing means fee income account I have to credit. But what I got in hand, I got cash of 7 lakh rupees. So cash will be debited because cash increased. Cash increased. So means debit. So how much is that? Yeah, 7 lakhs, isn't it? 7 lakhs debit. Balance should be uh, trade receivable, right? Trade receivable, credit or debit. Debit, it's an asset, right? Debit, so 5 lakh rupees. I think it would be a nice question if I give you 2, 3 journal entries with all wrong debits and credits. I'll just juxtapose it and then I'll say, if you agree with me, leave the question. If you don't agree, then give me the corrected picture. So then fee income I have to credit because this is my income. Income is increasing. Then passively told use the word credit. Hey, how easy this journal entry business is, isn't it? I believe some of the engineers have picked up already. I hope, like the story of your senior I gave you. He went on to the verge of quarreling with the recruiter, and for that he appreciated so much. And to confuse him, he said, "You have still time to rethink and change your journal." He said, "No, going to change." I think this small story will inspire some of you. Okay. So that's it. That's my journal entry. fee income is 12 lakh rupees. For the non-commerce kids, okay, why I didn't adjust this advance from customer against this 12 lakh rupees? Because as per contract, it will be adjusted against the final bill I will raise against the my customer or client, because it's a consulting company. Generally, they use the word client. Okay. Then I have some expenses. Okay. Related consulting expense of 2 lakh was incurred, out of which 1 lakh was paid, means 1 lakh is payable. Consulting expense, will just call it as consulting expense, right? Consulting expense, debit 2 lakh rupees. Expense increased, so we have to use the word debit for that. Asset expense drawings are in the same side. If there is increase, the word is debit. Now cash, I have paid, so cash decreases. Asset decreases, so I have to use the word credit. These words we are just borrowing from the creator of the knowledge body, isn't it? Credit. So 1 lakh, and then balance is payable. We'll just call it as consulting expense payable, right? I think the whole world can understand it easily. Expense payable, we credit it because it's a liability that increase, which means we have to. Okay, done. It released an advertisement in local print media announcing establishment of the consulting company and paid 50,000 as full settlement bill. So please understand, we have a gap on intangibles. We'll of course invoke some selected portion of that gap in the class when you deal with long-term asset accounting. So always understand that irrespective of the size of such kind of expense, it's a marketing expense, right? GAAP is very clear. GAAP has expressly included this item in the writing of the GAAP to say that these expenses shall go to the P&L. Please understand that what you have learned previously in accounting is sometimes completely irrelevant for IFRS-centric listed companies' financial statements. That is when exactly I urge you to move with the new body of knowledge or the new concepts. Okay. So this will straight away go to the P&L. I could have done like this. I could have said that massive expense is incurred to create awareness in the market about the existence of your farm, so as to reap benefit over a prolonged period of time instead of charging the entire amount of the P&L. But please understand that GAAP is very clearly writing a sentence. The philosophy of recommending its charge to the P&L, saying that the future benefit that would come out of this kind of expenses is too uncertain to quantify. So when accounting is confronting an uncertainty, being a conservative body of knowledge, it brings in its age-old easy way out, that take it to the P&L and forget it. So that is what you have to do. So the entire expense has to hit the P&L. Okay. So what we'll do, we just paid advertisement expense, so we'll call it as advertisement. Advertisement expense. Debit, it's an expense that should be debited. It is increasing 50,000, and then cash we are paying. Cash we are paying is credit. So that is 50,000. So suppose you are looking at a large company, and let us assume that you are launching a product or a product line. You are incurring massive advertisement expense of few crores. Okay. That should also go to P&L straight away as per IFRS. And Ind AS is just reflecting that, nothing else. Okay. So it's a more or less carbon copy of this position as far as this aspect of the accounting is concerned. Okay. It has to hit the P&L. Therefore, commerce students have to understand one thing, that the general concept of deferred revenue expense is a revenue expense. It's a recurring, a regular expense item for revenue expense. Engineers, please understand that expense can be of two types. One is called capital expenditure, the other is called revenue expense. Okay. Revenue items go to the P&L. Revenue items. Here the word revenue is a funny thing. Many words have many meanings actually. That creates further confusion. So the revenue items go to the P&L. So sales is a revenue item, salary is a revenue item. Okay, these are all regular day-to-day items. You are not creating any asset by incurring this kind of expense. So, but if an expense you are incurring, you have an asset in hand, you call it as capital expenditure. Capital word here means long term. So if an asset you are having which is going to give you benefit over a prolonged period of time, prolonged means beyond your accounting period, then you are calling it as an asset or capital expenditure. So even if you are incurring massive advertisement expense, old days of accounting, yes, to repeat, in old days of accounting, we had a concept of deferred revenue expense. Means in accounting, we understood that by incurring this expense, we did not get any asset in hand. So nature is revenue. It's a revenue expense. But since it's a massive expense, we generally what we did in old days of accounting, we deferred the charge of this revenue expense over some, I'm saying multiple accounting periods. Let us say 2 to 3 years time horizon I can think about. But that 2 to 3 years time horizon is my personal judgment. I am just somehow thinking, because beyond thinking, I don't have any tangible uh, thing with me to indicate that yes, the benefit will be enjoyed over next 2 years. I can't. I can't convince anyone. I can't demonstrate factually whether it's going to happen or not. But that's the way we did it. So let us say 9 crores of advertisement expense for launch of a product I incurred on 1st of April 2021, let us say. Then I judge that, okay, I will enjoy the benefit over 3 years. So 3 crores I'll charge to the P&L of 21-22. Balance 6 lakhs I'll carry in the balance sheet as an asset. And the concept is deferred revenue expense. Concept of deferred revenue expense is a dead concept under IFRS. I repeat, this is a dead concept under IFRS. So whatever item IFRS allows to be carried forward, that alone will be carried forward. And most of the expenses which we consider as sometimes, not always, sometimes as deferred revenue expense. If you see the list of those items, okay, then you'll say that more or less the concept no more exists. Everything will go to the P&L. So I think I had to give this explanation so that you accept corporate accounting in a new way. Okay. So that's the journal entry we have passed for advertisement expense, and this will go to the P&L, no doubt about it. Okay. Please never for a minute think that I'm telling something out of my own mind. Okay, I can't. It's a regulated body of knowledge. Nothing I can add or delete from my imagination. Okay. Staff welfare expense is 10,000. Just a repetition of some expense recording. Staff welfare, like you give, I am your employee, and then at 2 o'clock you give me a cup of tea, then maybe some nice snacks or biscuit. That is staff welfare. Okay. So staff welfare Are you thinking, students, in the class I should have some provision of student welfare? No, we do not have that kind of situation. So cash will be credited. Cash will be credited 10,000. Done. So that's it. Yeah, I think it is paid in cash. Yeah, everything is paid. So cash decreases. So I credited cash. So this is the journal entry for this. I think after I give you the journal entries, you can pretty well prepare the balance sheet and P&L. Remuneration bill of 2 lakh was outstanding on month end. This remuneration bill did not include anything for Smita. She was earning on an average 1.5 lakh rupees a month from her old farm. So question is, how do you read this information? So obviously, this 2 lakh rupees is not for Smita. The point I wanted to bring in here is that some students will say that yes, Smita can draw salary. That is the beauty of, that's really the beauty of a corporate entity. In a corporate entity, don't you think you can be shareholder of the company, means you are owner of the company. You can be director in the company, means you are managing the company. And trust me, you can be an employee of the company. For example, you can be the CFO of a company. Please understand for all times to come. Director is not an employee of the company. If anybody in the world is trying to tell that director is also an employee, please discard that opinion completely. It is a settled legal view that director is not an employee of the company. Therefore, you can use a language like employee director. Example: as a CA, I am the CFO of a company, but quite possible the company may appoint me in its board of directors as director, which means I will have two distinct capacities. One in the capacity of an employee, that is CFO, and the other one is that I'm a director. Therefore, you always remember, I think I'll just type out that sentence so that it will get registered permanently. We have a beautiful sentence, very short sentence, but powerful sentence, that director as such is not an employee. See the beauty of this sentence. This sentence was given to me by my corporate law teacher as a company secretary way back in 1995. I can never forget the beauty of this sentence. Means if you're looking at a director, only director as such, no way that person is an employee of the company. Right? Done. So here you need to take a call. Some students might say that since it is feasible for Smita to accept employment in the company and to preserve her earnings, it is 3,50,000. So total salary I will take is 3,50,000. Somebody will say that no, she is shareholder. There are only three shareholders. So maybe she is not looking at monthly salary to sustain her private life. She is more interested in the profit of the company. Then leave it. So I'm assuming some students will take the second view. So remuneration means I'll just have employee benefit. This is the corporate language. Okay, you check any listed companies P&L. This is the heading. So for corporate employee related expenses, please use this language always, because understand that in a company, employees might have been given stock options, might have been promised post retirement, let us say hospital facility, treatment, free treatment, etc., etc. So salary is just one typical component of overall employee benefit. Therefore, move away from the word salary to employee benefit. This is the language you'll find. Employee benefit debit and 2 lakh